All right, so you're looking at Schwab, SCHW is the ticker, and you're saying, oh, the thing that jumps out at you is that from the high of 96.24, divide by 2 gives you 48.12. Guess what? That's pretty much close to where we bottomed here this week. Now, you might ask, well, what if it takes it out? If you close the week below it, that would be bad. But, we didn't. We actually took it out here intra-week, but we bounced back. We retested it here. This is a possible low for Schwab. But with Gann or with Fibonacci, you don't really want to be one or the other. You want to open yourself up to the idea that the market's in charge. And if you're trading this, if you're buying for a bounce here, your stop loss should be just below this. Or if you're selling, you probably would wait for a close below this 50% mark in order to indicate you're going to go down here. And why do I say 61.8%? Because that is the mirror image of 38.2. If you add the 2, you get 100%. So notice here that 38.2 gave you the exact support here. So if this worked here, maybe it'll work down here. It doesn't mean it has to go down here. First, you'd want to see it take out the 50% mark at 48.12. If that doesn't happen, you still have to consider the possibility that this is a low. So you want to keep an open mind. Let the market tell you what it wants to do. If you see it taking out this support here, okay, then you can start thinking about this level. But for now, we don't really know, do we? So keep an open mind on that, and let's see what the market gives us. So the next thing you want to do is look at the Gann divisions. Notice Gann believed that you could divide any swing or any move into 8 equal increments. So if you start from the high and you go to 0, you divide the whole thing into 1/8 increments. 1/8 down from high would be 84.21. A quarter down from high, 25%, would be 72.18. And again, the 50% mark for this division would be the same, 48.12, as with the Fibonacci. They share that in common. But where they might differ is note that this was slightly off. 37.5 is slightly different from Fibonacci, which is 38.2. This one gave you the exact low. So I think you should probably go with Fibonacci with the idea that if it takes out this support here, you could look for 36.09 to be support, a Gann level, but I personally would go with 61.8, the Fibonacci level, 36.76. Why? Because this gave you the exact low here. If it's going to take this out, where's it going to find support? Probably, again, on Fibonacci. So it's not the case that you go with one or the other. See what the market is telling you. If the market tells you it's vibrating to Fibonacci, go with Fibonacci. If it's vibrating to Gann, go with Gann. It's not, don't be religious about it. Don't say, oh, I only do Fibonacci or I only do Gann. Go with what the market tells you it wants to do. So in this case, Fibonacci has my attention because this gave you the exact low. If it does take out the 50% mark, I'll be looking down here at 36.76. Now, one other thing I would point out, since the 1/8 division down from high gave you pretty close to the lower high here, if it takes this out, and let's say it takes out 36 level, and it doesn't actually stop with Fibonacci, let's say it's down here somewhere, well, then I would probably be focused on 12.03, which is 1/8 up from low, just as this is 1/8 down from high. There is a lot of symmetry to the market. People don't recognize it. And it's not that you can't always forecast the market, but you can be open to what the market gives you. So I would be looking for, if 36 area gives way, I would be looking, of course, here at 24 and at 12. But I'd really wonder if maybe, could it really go down to 12? That would be a huge correction, basically a haircut of 87.5% from the high. And if it's a true bear market, sometimes stocks do that. In the 1930s, they lost over 90%. And if you look at Amazon in the first tech stock bubble, it lost 92%. So stocks can lose over 90% of their value. So this would not be unheard of for Schwab to lose 87.5% of his value. And because this symmetry is what we're looking for, you would also look at this level here, only down. So if this is 1, 2, 3 down, maybe 6 down would be one. Okay, this would be 4/8, 5/8, 6/8. We'd also look at 24.06. So if, what we're saying is 3 divisions down and then 6 divisions down. So symmetry is important. I would be looking at, if this support gives way, 36.09, I would be looking at 24.06 and, of course, 12.03. They're all important, but, the reality is right now we're focused on this Fibonacci level. If this gives way, we're going to be looking at 36.76. So the point with Gann or Fibonacci is not to shoot for price targets. The point is that you want to be flexible and respond to what the market gives you. If it bounces off 36.76, okay, maybe that's the low. Same way it was over here. It doesn't mean it has to be the final low, but, certainly if you were short, you'd want to cover if it bounces off this level. So just the main thing is go with what the market gives you. Don't go with the idea of some fixed price target in your mind. Be flexible enough to know that the market can surprise you. And if you're open to different possibilities, you have a better chance of catching the exact low or the exact high. So I hope this has been helpful. My name is James Smith. GannAnalysis.net, that's my website. You can check it out, see what you think. But for now, Schwab has been in a serious downtrend. We don't know that this is the low, but what we're going to do on Monday, we're going to watch to see what the market gives us. Always respect the market. One thing to keep in mind, you can always be wrong in your forecast. The market's never wrong. Respect what the market gives you. If it doesn't take out this support, that might be the low. But if it takes it out, it's probably going down here or lower. So we'll know what the market tells us next week.